talk about Tesla's delivery and production numbers. We had modeled something
and the intraday move in the stock. I mean, that's what got me to believe that. By the way, when I pinged you on it, I'm almost like I have no idea who it was, but I know it was someone huge. But like Tesla was going down on the number, like on the fundamental, but then it caught the basket bid, and all 7 of those stocks went vertical. So again, that's what happened.
I found it fascinating. It's a bad report. We were theoretically bearish, and we thought deliveries would be higher than 430, roughly where they came in. So this is price cuts. This is lots of noise around new, revised vehicles, things like that. And you still saw a delivery disappointment of 400 and roughly 30,000, and it roughly matched production. So they produced slightly fewer vehicles than they delivered. So inventory came down a tiny bit. But what's fascinating about it is they used the excuse of production difficulties in the quarter to explain weak deliveries. And that's not correct, because there's an enormous inventory build. They could sell out of inventory as opposed, and you're dealing with a relatively limited set of models. It isn't as though you need to, you really are impacted so much by the production in a given quarter when you have the enormous stockpile of inventories that have been accumulated over the last 4 quarters. So it is surprising that they weren't able to deliver and take down inventories more. I think it's a pretty bearish read for Tesla and into the quarter, where you'll have lower sequential production, lower than expected production, which will tend to make fixed costs higher, margins lower. And it was finally a surprisingly sequential change in sales. I mean, you still have growth at Tesla year over year, but that's decelerating pretty sharply.
Yeah, utilities are crashing like they did in 2008. I mean, I'm old enough to remember that signal. Something's really getting bad when that's happening. And in this case, I mean, back then you had oil ripping as well. But you're in this place where you quite literally can't own anything if your job is to try to catch the benchmark into a lot of long onlys have I think 24% of long onlys have an October fiscal year end. Now all of a sudden you're getting body bagged, right? Like you're for 2 months, your performance, you're just giving it back. And you just wake up in October, first day, and you're like, fuck it. Like, I got to sell all this rate sensitivity. I'm just going to plow it into where there's liquidity. I think that's what happened. And I can't confirm, neither will they deny. So it doesn't matter. But, I've been around this game a long time, and to see a day like yesterday where the breadth is on that order of magnitude, and it wasn't just that 78% of stocks were down. It's that the average stock was down 1.7%, as I've said multiple times, which, Tier 1 Alpha wrote about this too. That would say that the S&P could have or should have been, on most days that happens, the 80-20 rule with a big down day on average for single stocks, the S&P is down at least 1%, maybe 1.5% or 2%. So, that's Tesla was a big part of that intraday move. Obviously, we'll see what happens today. That's why I love the game. I get to get right back into that batter's box, no matter how old I am.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.